Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right. Hey, Andy, so we're talking Costco, another stock that's at record highs going into earnings. It seems like foot traffic, happiness levels for this company every quarter are pretty good. People like going to Costco. It seems like a bargain compared to their membership price here. But do you have the data to back up these elevated levels in the stock?
Yeah, when we look at Costco versus peers, we really see it leading in nearly all of the metrics that we cover at LikeFolio. Even web visits up 7% year over year when compared to peers is a really good number. They've got a new CEO coming in. Not sure how the new CEO is going to approach e-commerce, but historically they've been very targeted about what they offer online. We expect that to continue and expect the growth to be solid as a result. The happiness levels, the consumer happiness levels for Costco took a little bit of a hit because Costco started to really crack down on the sharing of memberships and being a little more strict about who can come into the store. Reminds us a lot of Netflix. And we think that the result of this will be similar to Netflix in that the company will benefit. The users that were violating the rules are probably the squeaky wheel here, and probably not who the company's really worried about offending. And so overall, everything that we track at LikeFolio says Costco is the place to be. They're benefiting from everything from inflation to high gas prices. We'll see if those tailwinds remain in 2024, but overall, this is a company where the executive team executes at an extremely high level, and the company seems to have a lot of macro tailwinds at its back, so we really like Costco in the long term.
Andy, I love the fact that you put the comparisons between these major retailers on your screens, on your data. And let me interpret for our viewers if I'm getting this right. Yep. Where we are in the middle to late innings of this massive retail battle, right? Amazon disrupted, Walmart kind of answered back. But of all of these things, is Costco winning this war? Because it's clearly not Target, obviously. But of all the things we're seeing here, are you declaring Costco right now the strongest horse in this race?
Yeah, I am. I think that they are coming out. They're meeting everybody where I think everybody now wants to be. So you had Target and Walmart. They were really kind of late to e-commerce. I think they did an okay job rolling that out. Target has really disappointed its customer base over the last couple of years, although that's starting to turn around. But Costco's been kind of the steady horse in the race. I think that they've really executed very well on the in-store experience, delivering, on their value proposition very well. And the way that they've rolled out e-commerce has been very patient. And I think that's starting to pay off now. And I think Wall Street's focus is going to shift more and more to that as e-commerce contributes a greater portion to Costco's top and bottom lines. And so I do think that Costco has been, kind of the most patient, most deliberate about the way that it's attacked the combination of in-store and e-commerce. And I think they're coming out on top.
Andy, going into this report, for over 6 years, they haven't hiked the price of their member fees. They said last year they didn't do it because of inflationary pressures on the consumer. Historically, they've done it every 5 years. If they raise, prices 5 to 8% like they historically have done, and this is a big generator of their profitability is their membership fees. Is that the caveat that you're seeing? Because I've got your mentions chart up here, which is, moving up to the right, which is what you want. But now I've got the stock price above it at this point. So is that the anticipation that investors and traders have that, hey, all they have to do is raise those prices, and that's why we're at all-time highs?
Yeah, you wonder how patient they can be with the, we don't want to raise prices into an inflationary environment. We want to treat our members with respect to their wallet. And so, look, it's free money. I think at some point Costco has to just say we're leaving money on the table. People are not going to quit their Costco membership over a 5%, maybe even 8% dues increase. It's just not that significant compared to what they spend and save in the store. And so I think it's free money for the taking. I think Costco probably should take it. I don't know about the timing. I think there is some anticipation that they will from Wall Street, but even if they don't, I would reemphasize that this is a company that, from an execution standpoint, is firing on all cylinders, and in almost every metric that we track at LikeFolio in terms of growth and consumer demand, consumer happiness, e-commerce growth, they are beating the best of the best competitors in their group, and we expect that to continue into 2024.
Do you guys have an earnings score on this? Because everything sounds pretty positive.
Yeah, we really don't put out an earnings score on Costco because Costco reports their revenues on a monthly basis. So there's very little that we see in the short term that they haven't already revealed. It's mostly about what are expenses and what are they going to do with that membership. And so on those metrics, your guess is as good as ours. But long term, we love the company, love the stock.
All right, great stuff. Great data as always, Andy. Really appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio, breaking down the data for us on Costco. I mean, Kevin, the stock price is reflective of their data. They're beating up their competitors, and traffic's actually improving, which is a bonus for them. And if they raise those prices, like I think